How's it going, guys? Jeff here, back again with another video. So today, we are gonna be looking at how crazy the market is right now. So over here, you can basically see that the market is just completely red. Everything is going down. Affirm is going down. Pinterest is going down. Shopify going down. Unity going down. Matterport, Robinhood, Liado, Snapchat. A huge part of my portfolio is going down. So what is actually going on with the market? So over here, you can see that the Fed's way proposal for eventual reduction in bonds holding. And this is quite important because the thing is that what is actually happening here is that the Feds are actually taking back the money that they actually have in the market. So over here, you can see that the Federal Reserve basically have a $8.76 trillion portfolio in the market of sorts. So over here, I'm basically just gonna be mirroring my iPad to show you guys what actually happens. So during a so-called like a market situation, okay, like be it your pandemic or whatever happens, the government will need money to help with the economy. So when they need money, what happens is that they will have to issue bonds, which is what we usually talk about, which is your 10-year treasury yields and such. So when they issue bonds, basically, once they have issued all these bonds, okay, the Federal Reserve will be buying these bonds with the money that they are essentially printing. Okay, it's not exactly printing money because it's basically just digital money, just like money that is basically in the air. They just write it out, money. Okay, but the thing is that so when they use this money to actually buy these bonds, basically all this money will be then going over to your JP Morgan. It will be going to your Credit Suisse. It will be going to your Wells Fargo and such. Okay, these are all the banks. Okay, once it goes to all these banks, okay, basically where they are actually all going into will be to two groups of people, or three actually, three groups of people. So first would be individual, such as you and I. If we need money, we go to banks, we loan for money. For people such as like businesses, okay, where they kind of need to borrow money for them to actually start their businesses, and mostly like corporations, which is very, very similar to businesses, where they just want to borrow money and then they can kind of use the money to invest and so on and so forth. So when they actually invest in the money, or they, for example, for the businesses, when they actually invest back into the business, back into business, when the business actually grow, then the businesses basically help stimulate the economy. For individuals, if they actually borrow money, and then like for myself, I invest back into, let's say, the S&P 500, which is the SPY, basically helping to stimulate the economy again. So this is how the rough sequence actually go when they said printing of money. That's kind of actually what happened. Okay, so what is happening over here is that after they have actually printed the money, right now the Federal Reserve basically wants to take back the money, because we are expecting a rate increase. So over here, I'm just gonna bring up the FOMC meeting. Hold on, FOMC December 2021. So yeah, over here. Okay, so over here, if you can see, this is the dot plot that we have for the FOMC meeting as of December. So over here, you can basically see that we are expecting 0.75% for the interest rate in 2022. Basically, meaning that we will be getting 3 rate hikes in 2022 alone. Okay, so if we are getting 3 rate hikes in 2022, okay, in 2022, basically, we'll be getting January, March, May, June, July, September, November, and December. So 8 meetings. Out of these 8 meetings that the FOMC will be having, 3 of them will be rate hikes. So we know for a fact that we'll finish tapering by March. Okay, we know that we are gonna finish tapering by March. But the thing is that we will only be getting the actual rate hike after the taper is over. So we're expecting the first rate increase to happen in May. So what is actually happening with this is that they want to not taper that quickly so that we do not have to increase the rate so early on. So if we don't have to increase the rate so early on, what actually happens is that we might actually be able to wait till June before we actually have the rate increase. But of course, kind of ironic how it is happening, because even as that's what they are trying to do right now, they're also printing money as we speak. So because of that, we are kind of just worried that we might be getting a May rate increase and a June rate increase. But something that's even more interesting that I thought would actually make sense for this would be over at the same dot plot. There were actually two people that actually think that we will be getting a 1% rate hike, which also means that we'll be getting 4 rate increases, which also means that it doesn't really take away from the possibility that we will still be getting 4 rate increases. Of course, on the other spectrum, we are also be getting 0.5, which is also 2 rate increases, which is a lot more possible because we have 5 members behind it. But I feel that because if this actually continues, there's a good possibility that we will want to increase the interest rate as fast as we can. Just get the 4 interest rates out of the way, and then for 2023 we can kind of slow it down so we can get back to our 3% altogether. I feel that's kind of basically what the Federal Reserve is going after. But yeah, basically right now this is the issues that we are actually going through. Right now, the Federal Reserve want to just buy back, well, not really buy back, they just want to get back all the bonds that they had prior to that. So if they do get back all the bonds that they have in the market, which is why you can see that there is such a huge sell-off in the market, like over here you can just basically see Affirm. Like I said before, Affirm, your Pinterest, the Shopify, the Snowflake, Unity, all of them are getting destroyed right now simply because money is getting taken out of the market. Basically the Feds are rug pulling the market, especially the fintechs and also the tech stocks. And also something to really take note of. Let me just open this up over here. Will be the 10-year Treasury chart. Let's open Market Watch. Yeah, so over here, you can see that on the daily chart. Yeah, so over here you can see that same thing as before. We see a increase in the 10-year Treasury yield, which is the issue here, because the thing is that when we do see an increase in the Treasury yield, it means that by right we are getting money out of the market. But the thing is that a lot of time when the yield actually goes up, companies, especially in tech and also in fintech, usually get sold off immediately because trading are mostly done with algorithms. I think about 60% of trading is actually done by algorithm, not by humans, which is why when they actually see this kind of a sudden trigger, such as a increase in the Treasury yield, basically they'll just trigger the sell order on either your Affirm, on your Pinterest, especially Affirm actually, because Affirm is not only just tech, it's also fintech, which is why you can see over here is getting destroyed 14% intraday. I have call options on Affirm, so I'm definitely bleeding because of that. But yeah, I think that this is going to be a tough market to really maneuver right now. But not only that, because the thing is that even for all the other markets, all of them are actually going down. Even for Apple is also going down. Tesla went all the way to $1,200 yesterday, went all the way down. Okay, well, not all the way down. It's about 4% down right now, which is why it's kind of like a worrisome issue. Of course, we do have some winners, such as like your Ford, because they did say that they are going to double their production on their F-15 pickup trucks, which is very, very interesting. I kind of like the model. I was looking into it the other day. Not that I'm going to get it or anything, because I don't think they actually send it to Singapore. Not that it's a choice for me either. But yeah, the market is basically going to be quite wobbly for the next few weeks, possibly. I don't really think we have that many bullish catalysts for us to really get onto, and also because we would be having our employment data coming out. Let's see, our employment report. Um, Employment report will be out on Friday, and because Barron's also reported a news saying that 4.5 million people actually quit their job in November, which is very very worrisome to listen to. I'm pretty sure I can find the article here. Let's see, employment report. All right, so it's over here. Yeah, so a record of 4.5 million Americans quit their job in November. And yeah, basically, over here, they are just saying that because there's 4.5 million Americans quitting their job in November, basically for the December, basically, we already saw the rough reports. But because in November, we get the 4.5 million Americans quitting their job, the worst thing is that in December we did not really get the full brunt of the numbers, but in January, which we will be getting on Friday, we'll see the huge brunt of it. We'll see the employment report being horrendous, and because of that, your recovery might not be doing so well because most of the time, employees are always in the recovery sector, especially with your airlines, with your banks, with the your cruise, your hospitality, the casinos, all those companies. I think those will be the one that will be heavily affected. But yeah, I think that because of that, this 4.5 million American quitting their job in November, I think this is definitely the sign for the whole Great Resignation, which I also have a video coming up for that as well. But yeah, I think this is quite an urgent video that I will probably be uploading today. But yeah, anyway, that's all I have for this video. I think that I really need to get this out as soon as I can. But if you do enjoy this sort of video, please subscribe to me. Follow me on Instagram over here. Over here. That is my tag. But yeah, anyway, do drop me a like, subscribe to my channel if you do enjoy the content. Drop me some comments, just give me some feedback if my camera quality is bad. I think I sort of fixed it a little bit. But yeah, anyway, hope you guys enjoy, and I'll see you guys next time.